Here is something that catches a lot of Australians out at tax time. The ATO says a work deduction only stands if you can show three things: that you spent the money yourself, that it related to earning your income, and that you have a record to prove it. Miss any one of those and the entire claim can be denied. The good news? Once you know the three golden rules, you can check every deduction yourself in a couple of minutes. Let me walk you through exactly how. So here is the framework everything hangs on. The ATO sets three golden tests for any work-related deduction. 1, you must have spent the money yourself and not been reimbursed. 2, the expense must directly relate to earning your income. And 3, you must have a record to prove it. According to the ATO, all three have to be met. It is not a pick-two situation. If even one is missing, the deduction can be knocked out entirely. Before we get into the moves, understand the stakes. According to the ATO, deductions that are private, domestic, or not properly connected to your income get rejected outright. And where an expense is mixed, part work, part personal, the ATO only allows the work-related portion, not the full bill you paid. Take Mia, a Sydney office manager earning $92,000 who claims about $1,200 of work expenses each year. If half of that is private or unsubstantiated, she does not just lose a small amount. She loses the tax value of the invalid half every single year it repeats. Over 10 years, that quietly adds up. Before any interest or penalties, the ATO might apply. Move 1. Check. Log into MyGov and open your linked ATO online account, then go to My Tax. Head to the Deductions section of your return and take each item one at a time. For every expense, ask, does this directly relate to how I earn my income? The ATO standard here is a close connection to the work you actually performed when you incurred the cost. Good looks like this: every item passes all three tests and nothing on the list is private, domestic, or capital in nature. If an item does not pass, take it off before you submit. Move 2. Split. A lot of expenses are used for both work and private life. Think phone, internet, or a laptop. The ATO is clear that you can only deduct the work-related portion, worked out on what they call a fair and reasonable basis. So identify those mixed-use items, work out the genuine work percentage, and crucially keep a note of how you got there. A receipt annotation, a diary, or a simple spreadsheet. Good looks like this. You're only claiming the work slice, and you can show you're working. That is what protects you if the ATO ever asks how you arrived at the number. Move 3. Verify. Before you lodge, go through your evidence. The ATO accepts receipts, invoices, bank statements, logbooks, or diaries, but each one needs to show what was bought, when, and why it was for work. This matters most for the substantiation-heavy claims like car expenses and home office costs. And here is the key check. Your claim cannot rest on the fact your employer expected you to buy something or that it is normal in your industry. Good looks like this. If the ATO audited the claim tomorrow, they could trace a clear paper trail from your payment all the way to its work purpose. Now, a quick word on a rule everyone half remembers. You may have heard you can claim up to $300 without written evidence. That is real, but the ATO is firm that it is only a record-keeping concession, not a free pass. According to the ATO, even under that $300 threshold, you still need to have genuinely incurred the expense and be able to explain how you calculated it. It is not permission to round up a number you never spent. Treat it as a small admin shortcut, not an invitation to invent a claim. Here is the biggest myth to clear up. People assume that if their employer told them to buy something, it is automatically deductible. The ATO says no. An employer request does not, on its own, make an expense claimable. There still has to be that close connection to earning your income, and you still have to substantiate it. So if your boss asked you to grab something, but you cannot show the income link, or you do not have the record, it does not pass. The test is always your 3 golden rules, not what someone asked you to do. Let us run it back fast. Rule 1. You spent the money yourself and were not reimbursed. Rule 2. The expense directly relates to earning your income. Rule 3. You have a record to prove it. For anything used both ways, claim only the work portion on a fair and reasonable basis. Remember, the $300 threshold is a concession, not a license to guess, and an employer request alone never makes something deductible. Check every item against all 3 tests in My Tax before you lodge, and you are in good shape. If this made the 3 golden rules click for you, do the friend next to you a favour and pass it on. Subscribe to The Fine Print for more plain English guides that help you keep more of your money the right way. And next up, watch our breakdown of home office and car expense claims, the 2 areas the ATO scrutinises most, so you know exactly what records to keep before the next return season. Just remember, this is general information only, not financial advice, so check your own situation against the current ATO rules.